I need your help because I'm looking at this hyper growth company that trades at a very reasonable valuation. It just has super fat margins, incredible free cash flow, a nice cash balance sheet. And I'm looking at this and it has the metrics that value investors love. Hyper growth, and yet this growth, it doesn't even seem like you're really paying for it. And yet I'm having trouble pulling the trigger on it. Today we're talking about InMode Stock, INMD. I'm going to do an overview of the business, quick overview of the business, as well as sort of what's holding me back. And I'd love to hear your thoughts in terms of what you think to my counterpoints or potentially my reservations. So if this is your first time tuning in, my name is Daniel, and you're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. And in full disclosure, this is not financial advice. And at the time of this video publication, I did not own stock in InMode, INMD. And so, look, let's do a quick overview. So, InMode is delivering on what most companies only dream about. I mean, you're talking about hyper growth, 90% growth like this year, and you can see their revenue, 2020 revenue, 206 million versus 23 million in 2016. That is just incredibly fast growth. You can see incredible net income. This is real profit. This is what many SaaS companies just dream about. I mean, this is incredible. 80% plus gross margins, nearly 50% pre-tax profit margins, tons of free cash flow, significant cash balances, dogs and cats living together, mass hysteria. I mean, this is exciting stuff looking at it. And so what do? They sell several lines of minimally invasive surgical equipment that's primarily used for aesthetic treatments like fat destruction, skin tightening, or face and body contouring. That said, their treatments seem innovative and they have some medical related procedures around, let's say, TMJ for dental patients and gynecological complications, for example, like incontinence. But broadly, it's selling this minimally invasive surgical equipment that's primarily used for aesthetic treatments. The key technology that they're using in several of their machines, I'm not saying all, but several of their machines, is based on radio frequency energy, which is to provide this surgical face and body contouring. So they're using it to effectively shape someone's body. It might be, delivers directional RF energy into the subcutaneous fat to coagulate, liquefy, and remodel tissue and fat. That's sort of the crux of the thesis here. And based on the results on their site, combined with the before and after from several seemingly independent plastic surgery clinics that I've looked at online, it seems like their technology works. How they sort of sell it in terms of this body contouring. And I'd argue the crux of their value proposition is that using their equipment is more efficient, repeatable, potentially safer and less costly than, let's say, having an invasive plastic surgery procedure. And, where plastic surgery also has, potential risks of, significant risks from potential general anesthesia, or the risks of, is this procedure actually easily repeatable? Where here it's equipment that ideally should make it a repeatable process across many different physicians. And so here it is, you're looking at a procedure that's office-based and outpatient, minimally invasive. And so it's clearly, looking at this, because whenever I'm looking at aesthetic types things, I always have a little bit of pause. I'm like, okay, how much of this is just fluff versus, is there a real product? And it doesn't seem like it's pie in the sky. As look, they call out selling over 5,000 units in the U.S. alone, over 10,000 effectively units installed around the world, and currently selling into 70 different countries with a pretty significant, a small army of direct sales reps. You can read the reviews on Glassdoor. I mean, it seems like some people are like, I love the opportunity. A lot of folks say it's really, really hard. And I think it's really hard because they have to cover so much ground, constantly having to sell. And it lacks a key aspect of a lot of software, let's say SaaS business models that really, I'll talk about it towards the end of this video. So despite having sold over 10,000 units so far around the world, that's cumulatively, their growth trajectory is dependent on selling more units to the tens of thousands of physicians around the world that consider aesthetic and wellness office-based procedures to, let's say, supplement their business. So they're looking at gynecological, ophthalmologist, plastic, ENT. So they're considering all these different types of things. So around 100,000 surgically trained physicians in the U.S. and around 200,000 globally that they're looking at. But still, I mean, that is something to think about. Okay, they've already sold 10,000 units. how much of the 100,000 in the US, how much of the 200,000 globally could they be selling into? And that's going to be one of the things I'd want to think about longer term. They've also, won some brand ambassadors. Paula Abdul is a brand ambassador, and after having several favorable experiences with their technologies, she ultimately searched for an alternative to invasive traditional cosmetic surgery and ultimately found InMode's minimally invasive aesthetic solution, saying, hey, this was such a favorable experience. I'm gonna effectively, compliment it and show it off and say, hey, this has historically worked for me. Okay, so what about valuation? Because a lot of the things I've been talking about seem really favorable for InMode INMD stock. But first, a quick plug where if you're interested in joining a community of fellow investors looking to learn and find exceptional companies, we have an exclusive community on Discord where I interact almost daily. You can sign up at unrivaledinvesting.com, click join the journey. I also call out potential multi-baggers and share my own personal portfolio for those interested. Once again, that's at unrivaledinvesting.com, click join the journey. And if you enjoy videos like this, please make a point of hitting that subscribe and thumbs up button. And so, are they cheap? I'd argue by traditional metrics, INMD or InMode seems very cheap. After all, they're growing at 90% this year to date, 90% through the third quarter 2021, and they trade at a low 20s price to earnings multiple. That's not a low price to sales multiple. That's based on their actual free cash flow, actual earnings. The stock is down something like 50% in just the last few weeks. This would make many folks say, wow, doesn't this look cheap? By many traditional valuation metrics, this could be a screaming buy. But there's a few things you need to consider if you're either a bull or you own the stock or are considering it. First, I want to preface all this by saying if they deliver, the stock could have a phenomenal run. So it's possible that I'm being a little too cautious here. It's my nature that I want to figure out how am I going to get in trouble here, so that way it doesn't happen. That's the goal, is to avoid those things. Charlie Munger likes to say, tell me where I'm going to die so I don't go there. That's what I'm trying to think about here. So that said, let me share some of my reservations, and it's possible I'm being too conservative with those. But the first is I like to size up management. And here the story has two different parts, I'd argue. The first part is that Moshe Mizrahi is a serial entrepreneur and inventor. He's currently the co-founder and CEO of InMode. He was also the co-founder and former CEO of Syneron. So got to give him a lot of credit for what he's built, having built two separate companies. The second part is that he was previously this co-founder of Syneron, which sold aesthetic products around hair removal, wrinkle reduction, acne treatment, similar, but I'd argue less potentially unrivaled than what you're looking at with their products. These products seem like what they're doing here with InMode strikes me as closer to unrivaled. It strikes me as a more competitive product versus dealing with, let's say, hair removal and wrinkle reduction and acne treatment. That is a very competitive, very rivaled space. Here it is using this RF technology. It's possible they're sort of setting out a niche for themselves. It's very possible. And this is part of the I need your help in terms of feedback. If you feel like I'm missing something, I want to hear it. Here it is. Syneron, the previous company that he started, IPO'd in August of 2004 at $12 a share. Then fast forward to 2017, so a nice long time, and Syneron was acquired for $11 per share from Apex Partners. I don't think there were any stock splits during that time, so this was overall a very subpar return, and that's just not really appealing. Like I'd want to, if I'm a shareholder, I'd want to dig into that further. Not saying that, what is past is prologue here, but it is a data point I'd want to consider. Is it just because the old products that they were selling were so competitive, were being sold in a marketplace that had a lot of other competitive products, and that here it is, you're not going to face that problem? Or is it the second bigger data point that I'm sort of missing and struggling with? And so this is the big crux of what's sort of holding me back, and this is why I need your help, which is that at the end of the day, I'm just a little confused about their long-term growth potential. I mean, what concerns me is that 90% of their sales are effectively one-time in nature. And earlier I talked about how they've sold 10,000 worldwide, and they're talking about maybe 200,000 physicians worldwide that they could potentially sell into, but maybe it's only a fraction of that would be willing to do it, because they're looking for additional income with aesthetic procedures. So they sell a piece of equipment for 80% plus gross margin to a plastic surgery clinic. I get that, or an OBGYN. I understand the appeal here. But the challenge is, and this is a challenge you also come across with the Glassdoor reviews, is that the sales force effectively has to constantly find new customers, new clinics to sell into, or the company, and here once again giving credit to management, has to invent new equipment so they can sell new procedures. And so that is challenging. That's sort of like a treadmill to hell aspect to it, because you don't have this recurring revenue that makes the software as a service businesses, they trade at 20 times sales versus 20 times earnings, but the business repeats each year, where here it is, it's like, well, wait a second, all these sales, 90% of the sales this year, this is effectively one time. It's a physical selling capital equipment. For a time, this will work. But what I'd suspect is that, similar to Syneron, eventually this business hit some sort of growth wall. And with Syneron, what I think happened is that they got impacted by the great financial crisis. Either way, great financial crisis, and I suspect also other competition, just because there were other competitive products. So either way, when you have this sort of overhang of the fact that you have to, in order to grow, let's say, in order just to grow, you need to reinvent your book of business in a significant way, I'd argue that it warrants a much lower valuation. And given that it's tied to aesthetic procedures, that also is something that's discretionary income. I'd also say that warrants a discount, because that future growth could be a lot less certain. And future growth, the sustainability of growth, I'd argue, is one of the biggest, most important factors whenever you're valuing any company. And that's part of the reason why it trades where it does. What happens if there's a prolonged recession? Honestly, though, like that's a legitimate question. So I'm raising these points not because I'm a bear on InMode. These are legitimate questions that I have, and that's part of why I talk about the community earlier. Is at Unraveled Investing, is I'm saying, look, everyone needs to learn, myself included. And so if folks have data points, I look forward to reading it, here and on, our exclusive Discord, where folks can share, oh, here's this insight on this company, why. And that's part of it. Everyone needs to constantly learn. I'm looking at this and I'm saying I'm struggling to see why they're going to be able to keep posting growth. Yeah, I do see that they're particularly innovative, constantly launch new products, but isn't there that risk that you eventually hit the wall and then you have this, huge potential cash burn because, they're not actually growing the way they previously thought and they have to reinvent their book. That said, look, I'm honestly super impressed with how they've been able to innovate and continue to grow. Even during COVID, they've posted incredible growth figures, even during the COVID lockdowns. I mean, I've seen some real medical procedures, not aesthetically driven, but real medical procedures effectively dry up. Here it is. This business continues to post strong growth. And so what do you think? Do you feel like there's something that I'm missing here? And once again, I want to reiterate, if they execute, given their valuation of around a 20 times earnings multiple, if they're able to continue at this level of business, continue to grow, I mean, they're growing 90% this year. If they just grow, let's say 10 to 20%, annualized for the next 5 years, and if they continue to have a clear trajectory for significant growth in the years ahead, then the stock could work extremely well. They got share buybacks, tons of free cash flow, so the stock could work extremely well, but it's just that uncertainty over, will they be able to continue accelerating their business or even just keeping up their current business if there's any sort of change in the macro, or it's just, do they tap out the market potential? And that's the part that I'm having a little bit of trouble with, but I'd definitely love to hear your views. Thanks so much for tuning in. Please leave a comment below. And if you enjoyed this video, please make a point of hitting that thumbs up and hit that subscribe button. Thank you.